What's going on? Welcome back to Financial Journey. So today we're going to talk to you about ChargePoint. I want to go over some of the current data points, what's been coming out associated to the company, and where I see things going from here. Before we get into any of that, make sure to hit that thumbs up. And with that said, let's get right to it. So on Friday, it did go up 0.55%. Very little volume, so 6.6 million shares being traded, 14.2 is the average. Institutions still haven't really been getting into Charge all that much because these are some of the transactions above $100,000 on the secondary market. Dark pool is a little bit more popular, but of course, dark pool is linked to shorting. So again, you can kind of take that with a grain of salt, but you do see the transactions over $100,000. On April the 1st, you see quite a lot. Most likely that is correlated with just rebalancing. A lot of institutions rebalance near the end or the very beginning of the quarter. So again, that's probably attributed to that. So you saw some pretty big ones, 3.5, 3.5, and 9.8 million. And so that was done again on the 28th. Aside from that though, there hasn't been all that much news associated to ChargePoint. So the last news came out on March 11th, and I believe I did encumber that in my last ChargePoint video. And SEC filings, you do see that S8 and then their 10K. In their 10K, it does show that they have about 327 million in cash and cash equivalents. So I think in reality that is good. But as I brought up in my last video, I did say that their burn rate is something to be of concern. And potentially if they don't rectify it, it is going to lead to bankruptcy. And maybe I was being a little bit more premature, I guess, essentially. Just, I think there's a lot of struggling stocks and companies in the EV sector, and charging stations is one thing that's more of a secondary stage, right? Because of course, if EV demand is down, then of course the underlying infrastructure is going to struggle. So I think all in all, this is why ChargePoint just hasn't really been able to lift off. You see a lot of stocks in the broader market just kind of taking off over this last month and a half, as there's been a lot of hype in the market, a lot of the fear and greed index as well. It's been relatively high, but ChargePoint has been lackluster. On a positive note, it has been holding its gains. So I think that's kind of a good thing, but you do see cash and cash equivalents fairly well. I didn't really go through this document in its entirety, so this is 159 pages. I will go through this over the weekend and maybe do a dedicated video all about this, such as maybe some of the footnotes that they're trying to hide or whatever else. So again, stay tuned for that. But just to give you a good overview, so as you can kind of see right here, so based on how much cash they do have at the end of January, this is how much they're burning through every single quarter. So this is why I did say that there is going to be dilution coming. I believe they have that deal with the syndicate of banks, or they do have that revolving line of credit that they could use, but in the end, they will need to dilute, as bad as that sounds. And 2024 has been relentless. So any stock essentially needing money or heavily reliant on, I guess, lower interest rates, which right now with ChargePoint with 301.05 million on debt, I know a lot of that is long-term debt, but still, it is something to be of concern over. And so I think all in all, just ChargePoint hasn't been in a very good place. Their balance sheet isn't necessarily the best, and they are in a struggling sector. So all those things is kind of why I did a bearish video on my last kind of coverage of that. Latest 13F, so you do see some institutions kind of maintaining their position. So a lot of this was from Q1, or actually all of this was from Q1. So it's kind of, I think, anticipated. You don't see that big of movers. It looks like Investco did increase through this ETF, PBW 78%, and then this one PBD 65%. So at least one ETF is really backing up the bus. Aside from that though, it has been relatively quiet. So let me know your thoughts on that in the comments below. One thing that just came out that gave it a nice boost up, at least sentiment wise, was this. So a new analyst rating did come out yesterday, a buy rating, Needham, Chris Pierce, who has a 32% success rating. And he did cite just better than anticipated demand coming from EVs. So I'm not really sure exactly where Chris is getting that, because I do cover quite a lot of EVs under this channel, and a lot of the key ones aren't really seeing all that much demand. So I don't know where he's getting it from. Maybe that's why he has a 32% success rating, but still something to kind of consider. While I'm actually on here, I'll give you a quick overview of the Elliott Wave technicals, because a lot of people do in general like that. But it does have a pivot point of $1.70. So for as long as ChargePoint is above that, which right now it is, then it is anticipated to get between around the 230 kind of mark. And in reality, I do feel that is very accurate. It's been holding its gains very well. And so in general, it is just a matter of time before it does start to go up. Of course, a lot of people probably have significant higher averages than 230, but this is why it's a long-term investment. That's if you do believe in any EV stock, you have to be comfortable holding it long-term. I think initially there was just a lot of hype with EVs in general, and ChargePoint's been one of those stocks I've been covering on and off for a while now because it has been very discouraging. I did see a lot of upside with ChargePoint, just clearly with their debt and just the struggling sector in among itself. It's been not the best. But of course, I don't need to tell you that. I'll give you guys a quick overview of some of the current data points, starting off with shorts. So on Friday, shorts did return 607,000 shares, most likely associated to that analyst rating, but 29.29% of the free flow is being shorted. That works out to be 113.4 million shares overall being shorted, and that works out to be $207 million. Essentially, utilization is at 100%. Short score, so the higher the number, the higher the likelihood of a squeeze happening, is 87.16, and then cost to borrow average is 16.52. So if you kind of remove the name ChargePoint and just look at the numbers, technically ChargePoint is a squeeze play. The only thing that you do need is a surprise catalyst that will prompt the stock price to run up, in turn having shorts close out some of their positions. So it's an interesting kind of scenario. Just right now the ball is in ChargePoint's court and they need to physically do something. So hopefully within this document, this 10K as well, there is a lot of Easter eggs alluding to something positive coming for the foreseeable future. So again, stay tuned for that. But when it comes down to options though, $24,000 in calls being purchased versus 34 in puts. So dollar value wise has just completely diminished, similar to the actual common stock. So big money just isn't really getting into ChargePoint. Maybe they're just waiting for, I don't know, some big catalyst or like explosion to happen in the broader market. I'm not really sure. But sentiment wise, 38% of all the options being done on Friday were bullish. So I think that's kind of a good thing. Behind the scenes of the call options that were being purchased, there's a consensus for it to be above $2 by the end of next couple of weeks. So I think that is fairly realistic and somewhat in line with the Elliott wave technicals. Looking at puts, you do see a consensus for it to be below $2. So even in that regard, the risk versus reward is very much there. So I think that's kind of a good thing. Of course, with ChargePoint's low price, the strike prices, it just doesn't really make sense. So this is why you do see more of a reduction in the overall dollar value getting into ChargePoint through options, because it doesn't, like, if I'm holding the physical stock, the premium associated to maybe selling a $2 covered call isn't really worthwhile. So it's kind of a interesting scenario. If they were to do a reverse stock split, for instance, then yes, that would obviously boost the dollar value for options and everything like that. But as it stands, it's not really the best. And like I already pointed out, so big money isn't really getting into ChargePoint as of late. Dark pool is just doing what it normally does. You do see that interesting rebalancing. So it is on at least some institutions' radar, just not on a daily basis. But moving on with it at $1.83, it is trading between this S1 and the pivot. So as far as the high, so it was $1.85 on Friday, so kind of bounced off this pivot point right here. So we do know that's a very strong resistance. But beside the point, ChargePoint in comparison to a lot of other EVs, it's doing fairly well, because a lot of other EVs are trading mostly between this S2 and this S1, and in some cases the S3 to this S2. So in comparison, like, ChargePoint's doing okay. And so this is why I did say that it's actually holding its gains fairly well, because if it was kind of more correlated with the EV sector, once again, it'd be more so around this S2 to this S1. So I think all in all, kind of impressed by ChargePoint holding its gains. But again, they definitely do still need to figure out how much they're burning through, because this is something to be very concerned about coming from a long-term investing standpoint. But right here, looking on the actual chart, it has successfully transitioned and stayed in the higher percentile of the Bollinger Band. So I think in reality, this will be the foundation for it to potentially trend up. So I think that might be, again, a very good sign that the Elliott wave technicals might come to realization. So it's just going to be a matter of time before it tests that 50-day moving average, and then after that, that 100. Looking on stochastic though, you do see a nice bullish deviation, so white line above the red. But if it does continue status quo, or if it does trend up without fully breaking out, then you are going to see stochastic turn to kind of overbought. So meaning the technicals will have to kind of cool down and reset. So that's something that I wouldn't really want to see happen with ChargePoint. Hopefully it does break out before that does happen, but we'll just have to wait and see. And you do see number of retail investors getting in. So even though ChargePoint hasn't been getting all that much, I guess, institutional presence, you do see a lot being done by retail. And I'll give you a quick overview of that while I actually have Interactive Brokers up. On a side note, if you are looking for a lot of good compiled information, such as everything I do bring up on here, definitely take a look at Interactive Brokers for all this information to be completely free. But as of the latest 13 Fs that did come out down the pipeline, you see 198.25 million held by institutions, 10.78 by strategic entities, and 214.32 million by other, which is AKA retail. So retail does own majority of the float, so that's why I do bring up the momentum indicator, because it's a good representation of what the majority of investors are thinking. So let me know your thoughts on ChargePoint. Have you been buying? Have you been selling? What have you been doing? Do you feel, for instance, 230 is coming, or do you think it is going to retrace down with the broader EV sector and maybe hit a new 52-week low? What do you think is happening? Like I said, I am honestly cautiously optimistic about ChargePoint, and I feel like they do have a lot of good opportunity, but they definitely do need to figure their stuff out. And again, as what they did say on their last earnings, or kind of insinuated, like a lot of their issues isn't really their problem. It is just the underlying demand, which doesn't really stem from their business, right? It stems from just the broader sector. So it's ChargePoint and a lot of charging station companies is just in a very difficult scenario. So let me know your thoughts. Don't forget to hit that thumbs up. But one final thing I just wanted to share with you, take advantage of this promo. Simply sign up for a new account with Moomoo, throw $100 at it, and they do give you 7 fractional shares of the Mag 7, which is a $35 total value. So that is a pretty good return on investment for just throwing $100 at a new account. So let me know your thoughts on that. Take advantage. Link in the description below and also the comments. With all that said, appreciate all of you watching.